So in my last video I said I was going to talk about the pvsra method and btmm. So this is pvsra, this is pvsra plus btmm. But I'll do the pvsra first because it's a bit easier to understand than the beat the market maker system. So essentially the pvsra method is about price, volume, support, resistance, analysis. So what it is you see this blue line here. This is a 50 EMA price. Comes to and from the 50 EMA because the market maker needs to get retail traders interested in to put a trade on. And how does it do that? It goes to and from the 50 EMA every single time frame. Look at it. We'll just look at the blue line. It comes to and from it, to and from it, to and from it. Let's go on the weekly chart. Every 1 minute chart. To and from it, to and from it, to and from it. Get my point? Okay. So the next thing is the green and red vector candles. So the green vector candle means in the past 10 candles, so 1, 2, so say this candle, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, in all them 10 candles, in all these candles here, there was more buying pressure in this one lone candle than these 10 candles. And it's same with the red candle. In these past 10 candles, all them candles combined, there was more selling pressure in this candle than here. When you see price falling and these red vector candles, that means the retail trader is selling, and who's buying that sell? The market maker. So they have to recover their liquidity. See how it recovers it? When there's a red candle, you'll see a candle come and recover it. When there's a green candle, you see a candle come and recover it. See, straight recovery. Took a bit, but it got recovered. It might take a year to recover it. Look, on the daily, these candles will be recovered at some point in time. It could be years. It could be absolute years. These candles will be seen. And that's just the nature of the game because the market maker has orders in these candles. See how he recovers it straight away, recovers it, recovers it, recovers it. He keeps recovering his liquidity because he isn't unlimited. He needs to get his money back so he can move the market and get more money. So he puts an order on, buys here, buys. He gets rid of his buys up here and he sees a profit on the buys that he's got, while facilitating the retail trader's order. Now the next two candles are the pink and blue ones, which essentially, when you see the blue one, that means the green. When you see the pink, that means the red. It's 10 times, it's the same. That all them candles, 10 candles before that, there were more selling pressure, but it's different because this means selling pressure has reached a climax. Buying pressure has reached a climax. And obviously you need to know where to look for it because a pink vector candle there doesn't mean much because you're in a peak formation. But in a peak formation, you're looking for these pink vector candles because what it means is the retail trader is selling and selling and selling. The selling volume is climatic, and it's pins as well. You see the pins on these candles. They hide in plain sight, and retail traders fall for it because the Fed's shit, and it's just that simple. That's the pvsra method, simplified. There's also this aspect to it, but this is btmm as well. The range daily high and the range daily low. So essentially, a pair can only move a certain amount of pips a day because the IMF regulates the market. Think about it. If Australian dollar went from 0.7 to 0.5 in 1 day, that would fuck an entire world economy up. That can't happen because the forex markets control the world's economy, and if they just were that volatile, full economies will be fucked up. So they have to keep it in a certain range to keep the markets fair and to keep it regulated. Now this is the btmm method. The blue line, the light blue line, is a 50 EMA. The red is a 30 EMA. 200 is a white EMA, and the 800 EMA is this EMA. And essentially, every single one of them EMAs is a 50 EMA on a different time frame. So look, this is the 50 EMA on the 4 hour. This is the 50 EMA on the 1 hour. This is the 50 EMA on the 15 minute. And the red is a 15 EMA on the 5 minute. The next thing about the beat the market maker method is the psychological high and low. This is the only support and resistance in the chart. Support and resistance line are complete bullshit to get your orders. The only support and resistance is the psychological high and psychological low. It is set at the start of the session on Monday night when the market maker spread is set. Now notice here, when I say the spread is set, on the first 15-minute candle, price comes here. Now the spread would have been at 15. I guarantee you this spread came at least here, 20 pips down. All the orders got soaked up, even though it doesn't look like the market maker stopped everyone out. It did, because the spread opens up at the start of every session on each night, and that's why carrying trades into weekend in Forex is completely stupid. Look at this shit. Look, I can't believe this, honestly. It was a dirty play they did on all the pairs on Monday last week, this week even. Look at this. A 70 pip drop when the market opened. That means if you had a stop here, and there would have been plenty of stops here and here, the first price available to you is here when the market opens, and the market maker will fill you at that price. And 60 pips, that doesn't mean much to the average person, but say I have a 10 grand account and I put a grand down. I buy a lot. A 60 pip move on a lot is around £600. Say I put a £100 trade on, you've just lost £60 just from a dirty play like this. Never carry a trade over to the weekend. It is the stupidest thing you can do. I'm out of every single trade that I put on today. I only put one on today, but I'm out of it because I don't carry shit over into the weekend in Forex. It's not worth it. It's really not worth it. So the next bit about the beat the market maker system is a daily high and low. You see the light blue cursor, daily high, daily low. Yesterday's high was this here. Yesterday's low was this here. And what you want to be doing as a trader is you want to be taking trades at the daily high to go down and the daily low to go up. The next thing about the beat the market maker system is the three levels. Now, this is a thing that people find hardest to grasp, and it is the hardest to grasp, but once you see it, you can't unsee this shit. Like, quite honestly, like, I'll just demonstrate. Drop level 1 retrace, you got peak formation M. Now, M, the second leg can't go above it. It's variation on the theme. They're never, I say never. 80% of the time, the M formation will not look like this. It just won't look like that 80% of the time. It's variation on the theme. Look, that's an M. That's an M. That's an M. This is a W. So it didn't come down low enough. It didn't come down to test the second leg. It doesn't need to. The 8% of the time, they're not going to paint a perfect leg on an M or a W. But when it does, it's game over. It's completely game over when they do a perfect W or M. Now, let's get back into drop level 1, 2, and 3. So I've been on about in this my Bitcoin video. So M, drop level 1, you got your retrace. Drop level 2, retrace. Drop level 3. Rise level 1, retrace. Rise level 2. Now it doesn't break out level 2 to level 2 till here. And rise level 3 is always the biggest rise because they've got the money trapped in level 1. Trapped, trapped, trapped. They want to make them traders shit themselves and get out their position, and they want to rip their money out of their hand. It's as simple as that. See, level 3 brings the biggest drop, brings an 80 pip drop. Level 1 was 48, level 2 was 50, level 3 was 80, it's nearly 90 pip. The third level is always the biggest level. No different with any other traded asset. I'm going to link two channels in the description where if you want a better understanding of this, they have hundreds of hours combined that you can watch about this shit. Because on my channel I don't have much stuff. I'll be getting more shit out, but I don't have that much hours of content to watch on my channel. And I highly recommend, if you are very interested in trading or you trade, you use a retail traders shit. I'll show you. Look at what the stuff is pushed on retail traders. All over TradingView. Look at all that. Fucking. Just what the fuck is. What the fuck is that? Like. I know people make money with this, but 90% of people don't. Because it's shit. The market maker knows where your orders are in these types of things because your data gets sold by the creators of this thing to the market maker to know where your liquidity is. So if you're a trader that's been trading Elliott wave, Fibonacci, support and resistance, Gann fan, just bullshit like that, you guys know what I'm on about. You guys know the pain I'm on about. You know 80% of the time your stop gets hit. You know that. And you want a different method. This is it. This is the only viable method in Forex because the only way, and crypto, and any other asset, the only way you beat the market maker is by trading in line with him and noticing his behaviours. And these other strategies don't take any consideration. All they do is see a rally. You buy the rallies. You sell the rallies in a downtrend. Look, Aussie dollar is technically in a downtrend. All the technicals are pointing to it. I say that shit. The cycle, I'll just have a look at it. Let's see what the cycle is. Peak formation, drop level 1 retrace, drop level 2 retrace, drop level 3, big fat W, constant workings of the low. Now, as a trader, you have to accept that you could be wrong, but I'm not placing a trade on that consensus. No, I scalp. I'm not a swing trader, but everything is pointing to a downtrend, and when it gets to point up to the uptrend, you'll finally want to go along and it'll finally reverse because you don't understand the cycle. Now, please go down to the description and go on them two channels. It's a lot of time and dedication. It takes a lot of time to understand the principles of the system, but once you see it and once you get it, it's game over. It's honestly game over. Once you get your trading psychology in line and you understand what's happening, it's complete game over. You'll be ripping these guys to shreds every single week and be wondering what the fuck you was doing before. I'm going to leave it at that. My next video is going to be about Bitcoin again. I've got some more in-depth analysis to do on it and to what happened in today's session. And after that, I'm going to do a video on trading psychology because it doesn't get addressed enough in the game. I'm going to do a video about trading psychology and just psychology in real life, because if you're undisciplined in real life, your mind's not right in real life, that will directly translate into your trading. I know this. Every trader, if you're watching this video, you know this. The reason why you probably aren't finding success as a trader, and I'm still getting there, quite honestly, is because you need to work on yourself in real life, and you need to, how do you say it? You need to get your mind right. And this is a business, and you need to take it seriously. You would not go to a bit. Say you were starting an online shop selling washing machines and hoovers, for example. You won't come to it with a willy-nilly, oh, I'm going to get up at 10 o'clock, I'm going to throw some listings up, and then I'm just going to fuck off. And I'm going to do what everyone else is doing. That's not what you're going to do. You're going to get up early. You're going to put the time in. You're going to put the effort in. That's the same with trading, because it's a business. And your mind needs to be right to operate correctly in the business. And we'll also be recommending some books for people to read, because reading books definitely can help you as a trader on trading and on other topics that can direct into your life, which will direct into trading. And even if you're not trading, the books I'm going to recommend are interesting and about philosophy and psychology. So watch my next videos and you'll see it. So yeah, next video is about Bitcoin. After that one, psychology, trading psychology, and philosophy, and getting your mind right, because this game is about getting your mind right and having structure. Approach the business with structure, where 90% of people don't have structure. Think of it like that. Right, see you in the next one.